We're back on Morning Trade Live. Nvidia's earnings report was the biggest event on the calendar this week, and the chip giant delivered, beating earnings expectations and raising guidance as the AI boom continues. Shares are up more than 40% this year, and we are trading higher this morning as well. Let's take a look at the broader chip space and see what else is on the move, because this seemingly has been a tide that has lifted all boats across global equities, really. And so we're seeing Intel up 3.5%. Broadcom is also high, almost 6% this morning. And AMD also rallying to the tune of around 2%. Nvidia right now sitting at 3.9% higher. So that very much is the focus. Let's go inside out. And joining us now is Phil Panaro, the former founder and CEO of Boston Consulting Group, that is Plantinian. Thank you so much for joining me today, Phil. So what were your takeaways from this earnings report? I mean, there was a lot to like, but let's sort of break it down as to what really stuck out to you and what is the story moving forward now.
Yes. So I'm going to talk about the numbers first.
Yep.
And then I'm going to talk about how the technology drives the numbers, which is what everybody is missing, all the analysts, the people who looks at charts. You have to understand the actual technology. So if you saw their performance, they actually in one quarter did double what they did in 2023, over $50 billion. Also, in terms of 2024, they've almost exceeded their entire earnings in one quarter than they did in the entire year. So the real question is, why is that? And what's so special about NVIDIA? And the real answer is basically the AI revolution. But what I think is important for people to know is they should understand that AI is almost like electricity, essentially. Essentially, electricity went through people's homes, and then their infrastructure, then their offices and their factories. AI is only beginning, in my perspective. But even more important, and Jensen has only started to talk about this, and I've actually been talking about it for 2 years, which is the transition from Web 2 to Web 3. And Morgan Stanley, Citibank, and Goldman Sachs has said that it will be at least a $10 trillion transition by 2030. And when we talk about Web 3, we talk about the immersive web, 3D, using digital twins and AI combined. And if you look at 10 trillion in revenue, I can easily see NVIDIA getting 1 trillion of that, 1/10 of it. And then the last item is the data centers, which you saw 90% of their revenue is from the data center. And again, we're looking at a cycle. We're moving from CPUs to GPUs. For 60 years, CPUs dominated the environment, single processing. Now we have accelerated computing, which is basically what drives AI. You need a GPU chip, which is what NVIDIA sells, to drive AI. And what that is saying is they're saying it's 3 to 4 trillion by 2030. So to think that NVIDIA would get 1/4 of that, where they're right now getting 80% of that, is actually a low estimate. So my prediction of $1,000 a share and $1 trillion in revenue is actually conservative.
And everyone seems to be a winner here in this environment, particularly when you talk about the TSMCs, which manufactures the chips, when you talk about the memory names that are obviously supplying to an NVIDIA, when you talk about the semiconductor equipment type makers like the ASMLs of the world. And this is obviously why we have seen a reaction like we saw post-earnings. But can it keep it up? I mean, can we continue? I mean, I know you've thrown some numbers out there, particularly when you talk about AI workloads and the migration and the move to Web 3 and the $1 trillion that, you know, it could potentially lead to. But I mean, how sustainable is this? Because, you know, Jensen Huang has also pointed to some of the constraints out there. I mean, there seems to be some worries around circularity of this financing, but more around the energy that's actually going to power all this stuff too.
Yeah, I mean, and just to give you an idea, for every one chip NVIDIA has, there's 12 orders. So it's the supply constraint, which is the issue. It's not the demand. But to go back to that in terms of the overall market, and as aggressive I am with $1,000 a share and 1 trillion in revenue for NVIDIA, it's based on their products and their performance. I think investors have to be very careful about all those other stocks that do not have revenue or have negative PEs. And that's where you have to be careful. But in reference to NVIDIA, I'm a practitioner, as I mentioned to you before this discussion, and I see the value of NVIDIA. So if you want to talk about the data center, you must be wondering, how are they growing these numbers so fast? It's actually very simple. Anybody would do it, buy it all day long. When you put their chip in, it has 10 times more performance than a CPU. It costs 1/10 the amount, and it takes 1/10 the power and 1/10 the space. Who's not going to buy their chip all day long? And not only that, once you put it in, it actually drives AI, where you couldn't do that before with CPUs. So in terms of the data center, that's a layup. But really where the value is that has not been touched is in the physical AI space. We see a lot of generative AI, ChatGPT. We see the beginning of agentic AI, where you have an AI agent do work. That's only beginning, but it's starting to come. But in the physical AI space, what does that mean? That means where you create a digital twin of a building, and then you run it with AI in the digital twin. And generally, that's what I actually do. And we're getting 50% improvements. In addition to that, right now I'm looking at a pilot in Florida where we're doing a road where we're basically building a digital twin of the whole highway. And we're going to run it from the digital twin, which will create autonomous driving, which will create automatic detection of problems on the road. If you wouldn't believe this, but right now, they actually do most of those observations by sight. And if I remember correctly, the Titanic sunk in 1912 by looking at sight. We're here 100 years later, and most of the construction firms still are doing that by sight, believe it or not. So
wow,
what does that mean? That means all the roads, the bridges, the tunnels are all going to be converting to Web3 and all going to need GPU chips, which means there's trillions of dollars of revenue potential for Nvidia.
Okay, I mean, everyone's talking about the ROA and obviously how companies are adopting AI, and I suppose that's the next big story. Thank you so much. We're going to have to leave it there.
Okay.
Thank you so much for joining us, Phil, today. Phil Panaro, who's the co-founder, I should say, the CEO of BCG, Plantinium
yes.
at BCG. Former founder and CEO. Thank you so much. Let's trade it now with Tom White, host of Fast Market. An example trade for Nvidia, Tom.
Yeah, maybe not as aggressive as your guest was there, but it's still a bullish outlook here in Nvidia with this example trade that I got here. And it just takes advantage of, we've seen great reports out of Nvidia, but typically over the last few quarters, we might see a pop and then a sell-off a little bit. So I looked at a strategy that's a little bit more passive, a little bit more conservative, but still takes that bullish stance here. Going out to the December 5th weekly option. So 15 days to expiration. Got a couple weeks in this. And this is one of those strategies you can do over and over again. You just pick a strike where you think the stock's not going to go below over a specific duration. I looked at the December 5th weekly, the 185 strike put, selling that as a cash secured put, neutral to bullish. You're going to collect roughly about a 320 credit on it, maybe about 350 right now. The stock has continued to pull back below 193 now. But the credit you collect is what you can make on this. So if you collect $320 per put that you sell, where do you start getting hurt on a position like this is you go down to that break even of 180, 180 to the downside. So you've got a cushion of about 6%, nearly 6%, before you start getting hurt on this trade. Now, you also have to look at this capital intensive, right? You can look at this two ways. I just want to keep that credit that I collected with the fact that I think it's going to stay above 185 or that break even of 180, 180. Or I'm willing to buy the shares if the stock continues to move lower, goes below 185. I get assigned on that put. I'm actually buying the shares at 180, 180 to the downside if I'm still short that put and it's below 185 at expiration over the next 15 days. So you've got to have a lot of capital on this type of strategy. But if, say, you put in $181.80 bid for the stock, you might not ever get filled on that. Here, at least you'll be able to profit if it doesn't fall below 185.
Okay, a good look at Nvidia, an example trade for us. Just after that better than expected earnings report, we are up 3.3% in trade right now, 192 and change. Thanks so much for that, Tom White, as always.